Forget to list one account on this form, even a small one, and it can come back to reopen your divorce years after it's final. This is Form FL-142. It's a detailed inventory of everything you own and owe, and getting it right protects you long after your case is closed. Let's walk through it category by category. FL-142 is the form used to inventory a spouse's financial picture during a divorce or legal separation. On it, you list real estate, vehicles and other titled property, bank accounts and cash, retirement and pension accounts, investments and securities, household furniture and personal valuables, business interests, and every category of debt, from credit cards to taxes owed. For each item, you generally note whether it's community property, separate property, or a mix, along with your estimate of its current value, and for debts, the amount owed. FL-142 is part of California's mandatory financial disclosure process. Both spouses are required to exchange a preliminary declaration of disclosure early in the case, and a final declaration of disclosure later, and FL-142 is one of the core documents in both rounds. Here's something a lot of people don't expect. FL-142 is generally exchanged directly between spouses rather than filed with the court. What typically does get filed is a separate declaration confirming that disclosure was served, along with proof of service. Practices can vary by county, so confirm exactly what your court requires with its self-help center. Even though the completed schedule usually stays between the spouses, it carries the same legal weight as any other sworn disclosure. Both the preliminary and final rounds ask you to update FL-142 as your financial picture changes, so treat each round as a fresh, current snapshot, not a copy of the last one. This is not paperwork to rush. Full and honest disclosure is a legal requirement in California family law cases. If an asset or debt is left off, whether by mistake or on purpose, it can in some cases allow the other spouse to ask the court to reopen the judgment later, even years after the case is final. Now let's go through the asset categories. Real estate. List every property interest you or your spouse hold, whether it's your family residence, a rental property, or vacant land. Include the address, an estimate of current fair market value, and the amount still owed on any mortgage. Vehicles and boats. List cars, motorcycles, RVs, and boats by make, model, year, and estimated value, along with any outstanding loan balance for each. Bank accounts and cash. List checking, savings, and cash accounts, including the institution name and the account balance as of the date closest to your disclosure. Attach recent statements rather than estimating from memory. Retirement and pensions. List 401ks, IRAs, pensions, and other retirement benefits. These are often among the most valuable and most complicated assets in a divorce, so use the account's most recent statement for the balance you report. Stocks, bonds, and other investments. List brokerage accounts, individual stock holdings, bonds, and similar investments with values based on recent statements or reliable pricing information. Household furniture, furnishings, and valuables. List significant household items and personal valuables like jewelry, art, or collectibles. Everyday furniture generally doesn't need to be itemized piece by piece, but higher value items should be identified individually. And business interests. If you or your spouse own all or part of a business, list it as an asset, along with your estimate of its value. Business valuations can get complex, so this is an area where professional help is often worth the cost. Now the debts. They get the same detailed treatment as assets. Credit cards listed by creditor and current balance. Loans, including personal loans, student loans, and auto loans. Taxes owed, including any outstanding balance to the IRS or California Franchise Tax Board, and other obligations like medical debt or amounts owed to family members. List every account, even small balances. Use the most recent statement available for each debt, and note whether each debt is separate, community, or a mix. Not everything on FL-142 gets divided between spouses. Property owned before the marriage or received individually by one spouse as a gift or inheritance during the marriage is generally treated as separate property. The form asks you to identify these items as separate property rather than folding them into the community property list. Being specific here protects your claim to that property and gives your spouse and the court a clear picture of what you're claiming as yours alone. One note: if a separate property asset was ever mixed with community funds over time, like an inheritance deposited into a joint account, its separate character can become harder to trace. Note the history as clearly as you can, and if the situation isn't straightforward, that's a good time to talk to an attorney. Every value you list should be backed by documentation, not guessed. Attach recent statements, appraisals, or other records that support the numbers you report for bank accounts, retirement accounts, investments, and real estate. Supporting documents do two things. They make your disclosure credible, and they give you a paper trail if a value is ever questioned later. Guessing a value with no basis behind it is one of the most common ways a disclosure runs into trouble. The mistakes that show up most often: leaving an asset or debt off the schedule, even a small one, not attaching supporting statements or documentation for values reported, guessing a value with no basis like an outdated estimate or a rough guess, confusing FL-142 with FL-160, the property declaration, which is a different form used in different circumstances, failing to identify separate property clearly as separate, and reporting outdated account balances instead of recent statement figures. Building a complete, accurate schedule means keeping track of a lot of moving pieces at once and keeping it consistent with your other disclosure forms. That's exactly what Virdix is built for. The wizard at Virdix.co walks you through real estate, accounts, retirement, investments, and debts one category at a time, and fills out your FL-142 for you, free during beta. Virdix is a document preparation service, not a law firm, so this is not legal advice and it can't tell you how to characterize a specific asset, but it can help make sure your disclosure is complete and consistent from the start.